Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Beijing's pivot to stimulus mode helps China meet its official 5% growth target for 2024. But the property slump and potential trade tensions with the U.S. keep celebrations at bay. China's property giant Vanke is in focus amid reports its CEO is missing and that the too-big-to-fail developer may be seized by the government. Later, we speak exclusively with the Philippine Energy Secretary, Raphael, Lotilla, about whether tensions with China will impact his country's energy transition plans. And we hear from Boston Consulting Group's regional chair, Neeraj Aggarwal, on which countries he thinks stand to gain from Donald Trump's threats to global trade. Our top story today, China's economy meeting the government's 5% growth goal for last year after an 11th hour stimulus blitz turbocharged activity in the final quarter. Factory output and retail sales beat estimates in December. Both global research chief Greater China economist Helen Shou thinks the latest numbers look encouraging.
GDP numbers look pretty awesome. I think at 5.4% for the fourth quarter, that's definitely a beat. And there was some hope that actually after the policy package was delivered on September 24th, there could be some turnaround in the data.
Despite the strong data, problems in China's property sector are once again in focus as developer Vanke reportedly faces a takeover by state authorities. The Economic Observer also reported that the company's CEO had been taken away by police. Well, for more, let's bring in our Chief North Asia correspondent, Stephen Angle, joining us from Shanghai. Our China correspondent, Min Lo, also with us in Hong Kong. Steve, let's start with you. That data dump, on the whole, you heard from Helen Shou saying, you know what, it ain't too shabby, but markets not cheering.
No, not really. I mean, no one expected a V-shaped recovery so quickly. Obviously, it's going to be a slow, steady putting in of the foundation and then maybe a little bit of a glide scope upwards. But again, no V-shaped recovery. And it was, all the numbers pretty much were better than expected, as you can see. We got the fastest pace of GDP growth in 6 quarters, actually, in the fourth quarter at 5.4%. The estimate was 5%. That puts the full year growth right bang in line with what Xi Jinping said it was going to be at 5%. Go figure. We were expecting 4.9%. Retail sales also better than expected at 3.7%. And that is a crucial number because, again, consumer confidence is weak. Consumer spending has been relatively weak. And you can pretty much chalk this gain in GDP and the better than expected results up to the stimulus that we got in late September, but also on the back of exports. There was a better than expected export gain in December. Again, a little bit of that is due to front loading of orders from the United States ahead of any proposed and threatened Trump tariffs. But again, the heavy lifting still has to come from the Chinese side, essentially in, outlining what kind of stimulus will come from the National People's Congress in March. And property, I might add, there's no panacea for the property woes in China, but the property numbers were better than expected and showing signs of stability. New home prices were down just 0.8%. 19th straight month of declines, Haslinda, but almost flat. Residential property sales year to date were also down just 17%. That was the best set of numbers in 2024. So maybe there's a little bit of a floor coming in on the property.
Well, suffice to say, a challenging environment for China. We're talking about the longest stretch of deflationary pressures since the Mao era. We're talking 1960s. And we've been waiting for the big bang stimulus, that QE. That is still not happening.
No, but we're expecting some sort of stimulus package from the National People's Congress coming up, the Lianghui, in the first part of March. I believe it starts around March 5th, runs for a week or 2 weeks. We don't know yet. But again, the Central Economic Work Conference that was held in December, behind closed doors, laid out the plans for potential stimulus. I think the Chinese authorities are simply waiting to see what type of day one impact the Trump administration will have on the tariffs and the export front, and what kind of fiscal stimulus is actually needed. And that could be rolled out in March, as I said. But one number that I also want to point out that will probably be a focus of the National People's Congress is the demographics. The population, essentially, the births rising slightly to 9.54 million in 2024, but still, it's the second lowest total of new births since 1949, and the third year in a row that we've seen the population in China decline. And that's going to pose a demographic issue going forward for the Chinese workforce.
And not to mention unemployment rate of 5.1%, which is troubling. It is higher than anticipated. We know that the young finding it hard to find good quality jobs. Min, we know that property is a huge part of the economy, a huge part of growth, and it's been pretty lackluster. Recovery has been difficult. Now we're hearing that Vanke, a property player that's, once seen as too big to fail, is now having more troubles.
It today because we have seen the steep bond sell-off yesterday. Some of its bonds has halted trading twice after prices fell by 20% and 30% respectively. And today, again, we're seeing the same news. Two of its bonds halted trading this morning after falling by 20%. And this is a company that has huge amounts of debt that are maturing this year, $4.9 billion. That's the highest amount for any Chinese developers this year, according to Bloomberg calculations. And the last we heard is that Chinese local media is reporting that the CEO has been taken away by police. And a little bit of mystery here as to where the CEO is, because Bloomberg's calls to the CEO has gone unanswered. Another Chinese media hours later saying that the CEO was still promoting his company's rental apartment business on Chinese social media, and they managed to get a call in with him, but they didn't reveal the content of the discussion. So no one knows really where the CEO is, but it looks like, at least according to local media reporting, the government, the Shenzhen government, is sending in a task force to take over the reins of this company.
Min, we know that right now a task force is taking care of Vanke. What's the outlook for the company? What are the prospects? What happens to it now?
Yeah, so there's a lot of question now that the government is stepping in, or at least according to local media reports. Does that mean that we will see a government bailout? And according to our Bloomberg intelligence analyst, that is just not the modus operandi of the government. They don't like to bail out developers, and they're not likely to set a precedent here. So they're not likely to do the sort of cash injections that people are looking for. But what this could do is perhaps break that negative feedback loop between weak liquidity and slow sales, because at least the government stepping in could maybe increase creditors' prospect of recovery. Because if you look at that chart there, you can see that Vanke has been facing losses since the last quarter of 2023. Last year, their contracted sales has been in double-digit decline every single month, 35% decline overall in 2024. So now perhaps there would be some sort of management shake-up, the government stepping in, injecting a little bit of confidence there, hopefully to help creditors recover some of their credit.
And Steve, as we await Donald Trump getting back to the White House, we heard from Scott Bessent also weighing in on China's economy.
He's Donald Trump's pick to be the Treasury Secretary, widely known to be perhaps a little bit more of a pragmatist, more so than some of the other cabinet choices, but he was quite I guess, hawkish, if you will, against or about the Chinese economy. Let's have a listen to him, and then we can talk a little bit about it.
China is the most imbalanced, unbalanced economy in the history of the world. They are in a severe recession/depression. They may have -4% disinflation, and they are attempting to export their way out of that, as opposed to doing the much-needed internal rebalance.
Now, keep in mind, he still might be a pragmatist, and he's just talking to the room, obviously. That is a Senate Finance Committee confirmation hearing. So he wasn't going to necessarily be dovish on China there. He might be a little bit more difficult, obviously. And his assessment of the Chinese economy might be a little bit out of whack, maybe not. I'm not so sure. But again, he dismissed the inflationary impact of Trump tariffs or the threatened tariffs. And he said simply, China will just continue to keep cutting its prices so it remains as a top exporter in the world. But again, that goes back to the whole issue of China's problems, and they don't necessarily have pricing power with 27 consecutive months now and counting of factory gate deflation. And the entrenched deflation is obviously a big problem that China is going to need to, take on. But how are they going to do that if exporters can't find a domestic customer base because confidence is weak in the domestic economy? So it's a vicious cycle, obviously.
That's right. And he talked about how China is in a recession, not a depression. Our Chief North Asia correspondent Stephen Angle in Shanghai and our China correspondent Min Min Lo in Hong Kong. Well, coming up on Insight, an exclusive interview with the Philippine Energy Secretary about the country.
I think tariffs and other kinds of sanctions are going to be put in the background. It'll be a little bit of a wait and see what's going to happen. But and that includes, the threat on the tariff side of the 25% across the board tariff on all imported goods. So I think it's been overstated.
And that was Hartree Partners Senior Advisor Ed Morris speaking to us as energy markets brace for possible new tariffs and sanctions under Trump. Speaking of oil, let's take a look at how oil is trading right now, because there's been a lot of pressure on the back of expectations of looming threat of tariffs on Canadian oil in particular. And drill, baby, drill is that policy that Trump will adopt. Brent crude currently up by 0.3%, 81.56. New York crude also in positive territory. Natural gas futures pretty flat right now. Oil heading for its fourth weekly gains as markets see clarity on Trump policies. The man coming to office just on Monday. Well, we're keeping the focus on energy now with our next guest. The Philippine Energy Secretary is in Singapore for ministerial meetings and joins Insight exclusively here in the studio. Secretary, I should say, thank you for joining us. We talk about expectations of Trump tariffs and Trump energy policy. What are you anticipating?
Thank you, Haslinda. Well, this means, of course, that we have to focus on our energy security in the region, especially in the Philippines, and renewable energy is part of that. For your information, we are in the process of awarding 2 service contracts for native or naturally occurring hydrogen in the Philippines. So this is in a way, this is going to be a marriage between the technical experience that has been generated in the upstream conventional sector in petroleum and oil and gas, and renewables, because this one is naturally occurring, and we hope that these will be successful in the subsequent years, and we will be able to utilize naturally occurring hydrogen instead of having to produce this by ourselves.
All coming against the backdrop of the Trump administration, drill baby drill,
yes.
Expectations that the U.S. will be a dominant energy player. Does that put a lot more pressure on countries like the Philippines to do more in renewables?
Certainly, but of course it also means that it will have an impact as well on the potential of further gas exploration in the Philippines by American companies. So if the opportunities in the U.S. will be bigger for them, then they might decide to postpone their investments in regions like Southeast Asia.
How concerned are you that Trump would pull out of the Paris Agreement yet again? There are expectations that may happen.
Well, we can only speculate. We can wait for the announcements, but I don't think that that's going to change the agenda and the directions of countries like the Philippines. The reason why we're going to renewable energy is precisely to promote the energy security of the country. When we went big for geothermal in the 70s, that the cost of producing geothermal power was also very high. But then, in order to be able to be more secure and in the long run to drive prices down, we need to think of going into renewable energy. Right now, we're dependent on 60% of our power is derived from coal, and that means that more than 80% of our coal supply is imported, and that can't. And in the case of petroleum products, it's almost 100% is imported. So these huge dependency on imported energy sources cannot remain forever. And as the economy grows, we have to be more self-reliant and contribute as well to a sustainable future for the entire planet.
You talk about going big on renewables. I want to take a look at your targets. Currently, 35% by 2030, 50% by 2050.
Right.
People say you're not ambitious enough. You have a vibrant private sector. You have all the resources. You have wind, solar, so on and so forth. Why aren't you more ambitious in your targets?
If the financial requirements or the financial resources were there, we can go as the sky is the limit as far as renewable energy is concerned. But as you know very well, Haslinda, the challenge is in the cost. Even the renewable energies that will be coming on stream, they will initially have a higher cost, even higher than conventional energy. And this is where equity and the concern for communities that are dependent or have no access at all to energy is important. So if the price of coal, for example, is lower than renewables, then there has to be a balance. And coal right now is important in the Philippines. As I said, 60% of the power mix is from coal. And so how to transition to 35% and eventually 50% of the power mix is part of that challenge. So if the transition financing will be available, we'll be very happy to advance on that one.
Let's talk about funding. That is the issue, you say. So what are the new mechanisms that can be adopted? What are you looking at? And how can PPP help you with that?
Well, in the case of the Philippines, our power sector in particular, and the entire energy sector, is market-driven, privately owned, and unsubsidized. So we are really depending on the private sector to push the renewable energy, and they too have to take into account the risks involved. So here they have to balance the renewable energy and the need for stable baseload power. Now, by promoting geothermal energy, we are able to meet the baseload needs from renewables. But then the potential there is also limited, and we are therefore adopting policies like the green energy auction that would allow for us to seize the opportunities in renewables.
Your energy security depends also on your exploration efforts, and we know that those exploration efforts in the South China Sea have been derailed by tensions with China. Where are you with that? What alternatives are you looking at?
Well, we continue as far as oil and gas exploration. We continue in a number of areas in the West Philippine Sea. So, for example, in the case of the Malampaya, which is our only natural gas producing field, the near fields are being explored, and we hope that by the end of this year, the drilling will have commenced, and by 2026 or 2027, we will have additional gas flowing from there.
Can you quantify that amount?
Well, right now, what is this? It won't reach the same peak as Malampaya, which at some point was supporting 3,200 megawatts power. But we're also looking at areas within the archipelago. And here, even American companies have been interested in exploring areas which are ultra deep within the archipelago. And we will see how that proceeds, because the American companies have assured us that their interest is driven by the economics and not by changes in political administrations.
Can you name some of these American companies that you're working with?
They have asked us to keep this under the radar until they are ready to commit. By that time, therefore, we would be able to share with you.
But these are new companies you've not worked with before.
With new companies, not new companies, established companies.
Yeah, but new companies that you're working with.
Or will be returning to the region.
Speaking of the U.S., we know that the Philippines signed an agreement with the U.S. to explore perhaps, nuclear energy. Where are you with that?
Well, we have already signed the 123 agreement with the United States, and that has allowed us to exchange information and technologies with the United States. So since the private sector is the one that drives the development of power in the country, that has enabled our private sector to now directly get in touch with American companies and discuss the possibilities. So we're not limiting ourselves, of course, to U.S. nuclear companies, and we have been exploring also with other countries. Such as? Well, Japan has been providing us with technical expertise. We just came from the United Arab Emirates, and the cooperation, the memorandum of understanding that we signed with the UAE includes cooperation in the energy sector. In the case of Korea, we also have agreements for them to help us out in this space. So ultimately, what we would like to see is if the rest of the ASEAN region is also looking into the potential of nuclear energy, that there will be some kind of regional approach, not only in terms of emergency response, but also in the training of human resources that will be needed.
So, Secretary, you're considering nuclear, you have wind, and the other energy sources. I'm just wondering, in terms of...
all options are on the table.
All options are on the table, but how do you envision your energy mix?
Well, the renewable energy targets are the ones driving this. So, if by 2040 the ambition is 50% of the power mix from renewable energy, then that is the one which you said is not too ambitious, but we'd rather over-deliver than, than under-deliver. So it's, as you know, the Philippines is the only Southeast Asian country that has had not set a net zero target.
That's right. You plan to, very quickly, Secretary.
Well, we plan to engage, of course, the international community on that. But part of the reason is the lack of transition financing, and that's what we need to work on.
Secretary, thank you so much for your time today. Raphael, Lotilla, Philippine Energy Secretary. Still ahead on Inside, we discuss key 2025 global trade and business trends with Boston Consulting Group. Keep it here with us. This is Bloomberg.
As we entered into this new era in terms of concerns about geopolitics and whatever, this is something already ongoing over the past few years. So I would say that actually the market is quite adaptive and also resilient in terms of responding to these potential risks and also challenges.
What had previously been a place where domestic consumption accounted for 60% or 70% of the growth, it's flipped. And that export model is clearly under pressure in a world of tariffs and in a world where some of the end user markets markets are perhaps not going to be able to absorb the amount of capacity that China's export model leads towards.
There is room, if there is intelligence and creativity on both sides, to avoid tariffs being imposed on the European Union. Having said that, the European Union is already preparing, if necessary, some counter tariffs to the United States.
Insights from our guests this week as the world braces for the return of Donald Trump. Well, our next guest believes major changes in U.S. trade policy under the Trump administration will add to the cost of U.S. imports from certain markets. Joining us exclusively, Neeraj Aggarwal, Regional Chair of Boston Consulting Group. He oversees the business in China, India, Japan, South Korea, Australia, and Southeast Asia. That's a lot of the world, Neeraj. Now, we talked about how the world is increasingly becoming protectionist, and you can only imagine the Trump administration will accelerate that.
So, Haslinda, firstly, it's great to be on the show with you. There is certainly a lot more uncertainty in the world today, and it's fair to say it's only accelerating further. While it's hard to comment on the dispensation's decisions right now, as we all await them, but I think what is quite clear is in the redrawn trade map in the world, Asia is quite well poised. Why do I say that? Trade has been flatlining in the world in general, but Asia is pumping way above its weight. So India, which is growing well as an economy, is roughly poised to grow at 6% annually on trade, which is quite remarkable. Southeast Asian nations, because of their manufacturing capability and their strategic treaties, are well poised as well. And China, which people often comment what's going on there, because of the indigenous technologies, as well as the trade that they have with emerging markets, is also actually well poised. So I feel, in summary, whichever way the policies go, Asia is well poised on the trade front.
Well, the opportunities are there, but so are the risks. We talk about how Donald Trump's policies, will impact countries like Canada. We talked about China. We talk about Mexico. These economies, for instance, are ready to fight back. It's tit for tat. There will be ripple-down effects. I'm just wondering how you assess all of that.
So you're right. There is more uncertainty in the world. If I was advising business leaders or CEOs, our core issue is you got to be ready for a far more uncertain world. And the top two things we tell them, if I was to lay that out, one is you need to build geopolitical muscle. This cannot be left to the back room. This has to be front and center on the CEOs and the business leaders' agenda. What does it mean? You need to track what are policies doing. You need to track what are some of the military actions happening. You need to track what are industry-specific actions happening, for example, semiconductors. And you need to be ready for a swift action when those happen. For example, when the Russia-Ukraine escalation happened, literally 4 months after that, 30% of the analyst reports talked about the impact of that. If you had been able to compress the time, that would have been remarkable. The second thing is you could focus heavily on markets which are well poised for growth, even in this very geopolitically charged world. And markets like India, Vietnam, Indonesia certainly provide huge room for an avenue for growth.
Dynamics have changed, right? We talked about how Trump 1.0 affected supply chains. Countries in Southeast Asia, the likes of Vietnam, benefited from that. Trump 2.0, it's kind of different. You take a look at Vietnam, for instance. It has a huge trade surplus. So dynamics have changed. So perhaps Asia, Southeast Asia, may not benefit as much. They could be, under threat from Trump's tariff policies.
Look, ultimately, the underlying potential of these countries that I called out is very strong. As I look at, and as we look at the next 5 to 10 years, through a combination of what the macro trends are, which is underlying the quality of the companies, the quality of the opportunity in the domestic market, but also in the export market, the quality of the talent that is there in these markets. In spite of the change dynamics, I think there are huge factors in favor. The question is only, will you reach the upper end of the potential or maybe the mid to the lower end of the potential?
If you are assuming more decoupling happening in global trade, how would you advise companies to position? Would it be, getting your supply chains closer to home, friendshoring, nearshoring? Is that the strategy to adopt?
Absolutely. I think one thing which is very clear is you need your supply chains to be more resilient, right? There's no, you cannot put all your eggs.
You mean?
Can't put all your eggs in one basket. You need to diversify that. There is no two ways about it. You also need to do more nearshoring. Also good from a climate perspective, as you think about the climate footprint. So those two are absolutely essential. We've not talked about climate risks. You know, there are extreme weather events happening. Even from that perspective, not putting all your eggs in one basket is super critical.
Does it mean also additional costs for companies in terms of how they operate in the end?
The era of low-cost debt or the low-cost capital is over, I think. Because of why? Because of climate, because of geopolitics, and also increased military or defense spending. So all these three factors, CEOs are all ready for a high cost of capital world.
We talk about CEOs, a lot of them, the big ones, are headed towards Davos next week to talk about, you know, the woes in the world today. As much as AI could help how they operate, AI also poses threat. How are you assessing, you know, the potential and the downside to AI?
So roughly 2 years ago when I was at Davos is when this whole ChatGPT revolution happened, right? So it's been a 2-year mark. It's early to judge the impact of this technology. It is a profound technology, but I always say at the 2-year mark, the euphoria is more than the reality. I think the next year and two are really about the technology showing what it really, the potential is. There are far more excitement. 75% of CEOs we talk to talk about AI as in an exciting fashion, but the reality is less than 20% are getting the true benefits of it. So they're repivoting their efforts in terms of making sure they go after fewer things, but go after them with scale, so that the return on investment is well justified. At the same time, they're being thoughtful about the threats of not using AI in a responsible fashion. So that's the other thing which is coming. And the technology is also getting better in terms of the cost, because the cost is quite prohibitive. So how do you get the best returns on that as well?
Do you see AI helping to counter some of the negative effects of, a protectionist trade environment? How are CEOs capitalizing on AI to improve productivity, for instance?
So that is the core question is it more for same, or is it the same work for less? So can you get more output with the same set of workers, or can you get the same output for less set of workers? I firmly believe, and we firmly believe, you can get more output for slightly less workers. So there are so many unsolved problems in the world where the art of the possible has not been explored. Take healthcare. There are so many unsolved problems like cancer and disease. You will use AI to go after them. You know, the world is aging. They need a lot more services. AI can be hugely helpful for them. So that's an example of people need wealth management services, even not at a few $1 million in the bank, but a lot lesser. So you could use AI to explore all of those much better. At the same time, some places which are repetitive work, which is drudgery, yes, AI will help eliminate some of that as well.
We know that when it comes to AI and data, that's become quite a fight for governments. How might this play out?
So look, that there is, as I said, when the technology is early, there's a lot going on in this world. So people are careful about, there's lessons learned from data protection in the whole world of digital. I think European nations have been taking the lead on getting GDPR and other regulation in place. Many other countries are closely watching. So I feel in this world of data, there will be far more thoughtfulness coming from both the governments and the regulators in making sure we create a balanced world. But the technology always stays ahead of the curve from an innovation perspective. So regulators and governments are always playing catch up. It'll be interesting to watch how that space evolves.
But where are we in those conversations to do with regulations, and how much coordination is there among governments?
So that's why Davos, you talked about Davos, it's a very interesting point where multiple stakeholders come together. And for example, as BCG, we've been involved in dialogues on topic of climate and AI, health and AI, and also public-private partnerships, how we can do this in a more responsible fashion. Exact direction of that, I think time will tell. But my sense is regulators are well aware and they're trying to, but there's always a catch-up.
But realistically, how much can be achieved at Davos, and what are you hoping to hear in terms of conversations among the top guys, in government, and also the leaders of companies?
So the one thing I always love about Davos is there's a mood coming into Davos and there's a mood getting out of Davos. And there's an evolution. And why does the evolution happen? Because everybody comes from their narrow vantage point. And they get to Davos and they meet a wide set of stakeholders. And your worldview broadens. And the public-private partnership is a very unique thing where a lot of pre-work happens into Davos. So as I said, we've been working on the health side, on the climate side, and then key decisions get taken. So, and on me particularly, I'm keen to understand what is happening on scaling AI and what is truly happening on balancing cost and climate agenda.
You know, Neeraj, we've been talking about how there's so much uncertainty out there, especially with the incoming of the Trump administration. What gives you hope? What are you hopeful about for 2025?
So, firstly, what I'm hopeful about is the belief in human talent and their ability to adapt. A lot of the CEOs and a lot of the leaders I meet, firstly, after the year of election in 2024, they're being very pragmatic. They're being very thoughtful, and they have a huge bias for action. So they're not sitting in their ivory towers, not imagining. They know the world is tough, but they equally want a bias for action. And they want to be thoughtful. They want to put their employees first. They want to be, they care about the world more than ever before. I feel, you know, the agenda equally is, while it's about winning, it's equally about being responsible, more than ever before. So that combination and the new generation of leaders genuinely gives me hope as I think about it.
And the biggest risk for the world?
The biggest risks for the world are beyond the fact that I called out that the cost is increasing, is cybersecurity. It's a risk for enterprise, it's a risk for individuals. Climate risks, extreme climate events are increasing. You heard about the LA fires recently, but you know, there's more and more prediction that 20% of economic activity could get impacted by climate. So I think those are two big risks, certainly.
Neeraj, thank you so much for joining us today. Been a pleasure. Neeraj Aggarwal, Boston Consulting Group, is sticking around as we take a closer look at India. And a quick look at Indian markets just ahead of the open. Of course, Asian markets under pressure. We'll have more on Indian earnings next with results from Infosys and Reliance. Keep it here with us. This is Bloomberg. All right, we're counting down to the India Open. Of course, markets in Asia under pressure. Those better than expected numbers out of China not helping sentiment at all. Now, in terms of India, a $5 trillion market, been under a lot of pressure given the slowdown in its economy. We've seen how foreign investors have been making an exit, taking the money not just to China but to the U.S. as well, where returns are stronger. Problem in India, they say, is valuation remains valuated about 20 times price to earnings, and it takes earnings to keep up those valuations high. Well, India coming to the market. Currently, we're taking a look at the Indian rupee, 86.55. Unchanged versus the USD, and it does seem like Indian benchmarks are in line with the rest of the region, currently in negative territory. The Sensex down 0.4%. Nifty Bank Index lower by 0.7%. We're keeping an eye on the corporates in India. It is earnings season. Infosys raising its annual sales forecast. Infosys currently down by 4.5%. On the back of that, Reliance profit topping estimates for the first time in 7 quarters. Quite a turnaround there. Reliance Industries up by 3%, inching higher as we speak. Now let's get more details on Reliance's earnings from our conglomerates reporter, Pierre Sanjay in New Delhi. Ain't too shabby, Sanjay.
Hey, thank you for having me. Reliance is like this quarter is kind of a great example how the oil to telecom conglomerate is pivoting to the new reality and to the consumer businesses. Long back, the conglomerate has taken a conscious call to divert from its core oil refining business to consumer business, including telecom and retail. Now it's paying off very beautifully, and this quarter has been a great example, stellar example of how the festive season's demand has been capitalized by the Reliance Retail, and the tariff hike, which happened a few months ago, which is now happening, it is yielding results for the Reliance Jio Infocom, the telecom unit of Reliance Industries, and the management is expecting that now they said the benefits of the tariff hike has been getting in, and they are expecting some more benefits to come in, and other telecom operators are also expecting another round of tariff hike, which will boost Reliance Jio Infocom further, and the festive season's demand is expected to continue for 2 more months for Reliance Retail. And, the analysts, the street were expecting that some more weaker performance by its core business, which is oil refining business. But that was not that bad. It has also shown some kind of revival. So that is the key takeaways from the results, the third quarter results of Reliance Industries Limited.
Sanjay, some suggesting that perhaps its retail business will be the one to prop up growth.
So the key, when you look forward, the key things which happen is now, the key events for Reliance Industries would be opening up of gigafactories, which would be one key thing, the markets would be keenly watching, like how big it would be and what is the kind of, lineup they would be having to propel the growth of the new energy business, which Mukesh Ambani, chairman, is very keenly talking about. And second thing would be another kind of great subscriber mix for his telecom unit, which can yield better results for the telecom unit, and that could also, he would also expect some kind of a tariff hike. That will be also. Then one will have to wait and watch like how Reliance Retail will fare up, because the weaker consumption pattern could impact that business. So these are three things which markets are looking forward. One is gigafactories launch, and second would be another round of tariff hike, which can propel the further growth in the telecom unit, and the consumption pattern of the country, which will have a direct implication on the Reliance Retail's growth.
Sanjay, thank you so much for that. Our conglomerate reporter, PR Sanjay in New Delhi. Now, Neeraj Aggarwal, regional chair of Boston Consulting Group, is still with us, and he thinks India is emerging as one of the big global South trade stories. And you're saying it is poised for great trade growth. Why is that?
Absolutely. Look, there are many things happening in India at this stage. One is many companies in India have clean balance sheets. They're getting far more confident. I've been in boardrooms for the last 25 years. The quality and the confidence I see in the boardrooms today is more than ever before. That's an intangible. It doesn't get covered in the financial reports. But I think it's a very important intangible because it makes a real difference about the quality of decisions they take. I think there are newer things happening in India. For example, there's been historically many sectors, but what I'm bullish about is things like healthcare. There's a lot more innovation happening in that space. Manufacturing, finally, hopefully we get it going, not in every sector, in some sectors. Digitization itself is an imperative. So all of those provide avenues for new growth. So those two things I'm supremely excited about, and I think they create fuel for the future.
But people often talked about how, India's economy is intertwined with China. You talk about the manufacturing sector, the EV sector. It is reliant still on China. With China in the doldrums, how do you see India being impacted by it?
So look, the world is intertwined. There is no two ways about it. You can take India and China, but you can take all parts of the world because nobody is end-to-end on any value chain. The parts of the value chain which come from one part of the world go to the other part of the world. So I think that is true. But for example, in renewable energy, India is making a concerted push, be it solar panels, be it batteries, because that's very important for India's own net zero ambitions. That's very important for the world. So I think there are some places where they're trying to reduce over-reliance. At the same time, you can't go away from intertwining in the world.
China's overcapacity, they say that it threatens the economies, especially around us. Might that impact India greater than others, given that they're close neighbors?
Look, there are some industries in which China has huge scale. Solar panels we talked about, batteries we talked about, EVs we talked about. And they're much ahead of the world in the other places. The current geopolitics can impact some of the remaining parts of the world benefiting from that scale, and it can set us back by a few years. But other countries are also wisening up to the fact there are different shifts happening, and they're building indigenous capacity and also finding ways to. So we will have to wait and watch. But if there are some extreme regulations, it could delay it. But I am also hopeful that pragmatism will prevail.
And when you talk about pragmatism, will India benefit from the Trump administration? We saw the two leaders, Modi and Trump, being quite close to each other. Do you see that happening in his second term of administration?
It is very hard, as I said in the beginning, to speculate on what exactly the administration will do. But I do think the macro factors that stay in India's favor, the quality of the talent they have, the quality of the companies they have, and the confidence they have, all really project well for India. That being said, I don't want the companies or the talent there to get arrogant. You have to put your head down and keep working hard to earn your spot in the sun.
But people say India is not the next China.
And I think I'm not fussed about a comparison about India and China. I think they're two very different countries with very different political regimes, with very different starting strengths. I think it will be a force in the world of tomorrow, and it should not be the next China. I think the world needs different kinds of archetypes.
Is it realistic that Modi wants it to be a $10 trillion economy?
I think the path to a $10 trillion economy is absolutely there. The question is not the $10 trillion economy. The question is, what are the building blocks of today which will set it up to a $25 trillion economy? And I think that's the hard question. And that will mean more capabilities, more sectors, more jobs. And that's the challenge.
And what's holding India back?
I mean, firstly, when you say what's holding India back, there's a lot.
What are the challenges the country faces right now?
It needs, the manufacturing sector needs its own renaissance. The talent pool, while it's very high quality talent, it's not uniform across. There are more higher paying jobs which need to get created. Those are the things which I feel India needs to continue to work on and continue to solve for.
Today we talked about the high unemployment rate in China, and that's holding back the economy. You know, the young finding it difficult to find good quality jobs. And some say the same can be said about India as well. What are the prospects for the young, and what's the path forward? The job creation that has always been the problem in India as well.
So I don't think India has a job problem. India has a wage problem. So there are people are doing jobs all the time. You go to any place. Are they doing the right job which is commensurate with their talent and the wage expectation? I think that's the problem. So hence, more sectors in which India develops strengths is super critical for them to win in this world. And I think there's a large swath of people which come in every year in the workforce. Are they getting the job commensurate with their talent? Is that exciting? Is that keeping them going? And I think that's the effort.
So for those people who have yet to bite into the India story, what would you say to them?
Look, I would say I have been working in Indian boardrooms for the last 25 years. This is the most bullish I feel collectively about the economic prospects of India. And why do I say that? I go back to the same things. Many sectors coming together, digitization being a huge enabler, the confidence and the talent being absolutely there. It will never be a one-size-fits-all, and it will never be a single secular story. It will always have its ups and downs. And as long as you're ready to take a little bit of bumpy ride, this is a great story to back.
And yet we're talking about an India that has slowed down to 6% from 8% growth. There are people who believe that India's 8% growth is over.
And I think I was never as over bullish on the upside. I'm never bearish on the downside. I think a 7% growth rate or thereabouts held steady for a 20-year run can do magical things.
7% growth for India. Neeraj, thank you. Neeraj Aggarwal of Boston Consulting Group here in the studio. Let's take a look at how Asian currencies are doing. Of course, it remains a strong dollar environment, and we know Asian currencies have been under a lot of pressure, including the rupee hovering close to record lows. In terms of the Japanese yen, 155.44 is the level we're looking at, down about 0.4% versus the USD. Chinese yuan, well supported by the PBOC. Fixes have been in excess of 1,000 pips.